Welcome to Nasdaq's IR Insight Live. I'm Tamar Essner, and I'm joined by our guest, Mike Sokol, who is a Managing Director at our Market Intelligence Desk. Our topic today is the annual reconstitution of the Russell family of indices, a significant event in the equities market, which is scheduled to take place next Friday after the market closes on June 22nd. Before talking to Mike about the implications of this event, we wanted to provide some brief contextual overview. The Russell 3000, which includes both the Russell 1000 and the Russell 2000, is an index that measures the performance of the 3,000 largest companies in the U.S. based on their market capitalizations. The index represents 98% of the investable equity market in the U.S., and so a wider range of stocks are going to be impacted. Note that if your stock trades in the U.S., but your company is domiciled outside of the U.S., then you are not qualified for inclusion in the Russell family. Unlike some indices, which are rebalanced once per quarter, the Russell rebalance happens only once per year as a process to account for changes in companies' market caps and to move stocks between growth and value style indices based on changing valuation levels. Stocks can be added to, deleted from, or moved among the various indices. However, even if there are no changes regarding which index your stock is a member of, the weighting within the index can shift up or down, thus causing net inflows or outflows of investment dollars. There are about $1 trillion in index assets and ETFs that track the Russell, and that figure balloons to about $9 trillion when you include the active funds that use the Russell as their benchmark for performance. Given the surge in assets held by ETFs and index funds, the Russell rebalance has come to be one of the single most active trading days of the year, where any given stock can easily trade many multiples of its average daily volume, all at the market close and in the after-hour session. To learn more about what all this means for issuers as well as for investors, let's bring in Mike Sokol, who has been analyzing the equity markets for over 20 years. Hey, Mike, thanks for joining.
Hey, Tamar, great to be here.
So we know it's going to be a high-volume day come next Friday, but what can we expect for stock prices?
Yeah, just to put some numbers around that, we looked back 6 years just to get a number of trading data points, and we have about 1,500 trading days over that period. Over that time frame, they've had 3 Russell rebalances move higher, 3 move lower. But I think more importantly, if you look at all those days, you have an average move in the S&P of about 56 basis points for the Russell rebalance dates. If I exclude Brexit, which was its own unique situation, which the market activity all happened at the beginning of the day and then it flattened out. But you have about a 31 basis point move in the Russell rebalance dates. So really you don't discern a lot in the movements of stocks. Where you do see it is in the volumes. If you look at those same 1,500 days, out of those top 30 of 2%, 4 of the Russell rebalance dates are in there, or put another way, of the last 6 years, 4 of the Russell rebalance dates were either number 1 or number 2 in terms of market volume.
So it's going to be a lot of volume, but not a lot of volatility.
Yep.
But that being said, if my stock is going to be added to an index, I would expect a big stock rise. And if I'm going to be removed from an index, by contrast, I'd expect my stock to go down in value appreciably. How does that work?
You would think you would, and it kind of gets baked in over time. This rebalance doesn't just happen on the 22nd, although that's the focus, and that's when the index make their moves. It's really about Russell being very transparent with their methodology, very objective, so that market participants know what's going to happen probably weeks in advance. They can handicap which stocks are going in, which are going out. They can make estimates about the number of shares to buy and sell. For example, there's about 65 billion in two-way order flow that's going to happen. And so by the time you get to the actual rebalance date, brokers have done a pretty good job of knowing how many shares there are to buy or sell and going out to their customers and saying, hey, if you would like to buy or sell in quantity, there's a chance to offset that. So by the time you get to the 22nd, it's priced in, and usually is not a lot of price movement on the close.
So we see a lot of volume, not a lot of volatility, but what can we expect for underlying equity ownership? Some significant changes there?
Yeah, you could, and it's you don't see that in the day. You have to have, you know, the 13 F and DG filings or the surveillance to find that out later. But if you're an institution that wants to buy or sell in size, whether or not you're an indexer, this is your chance to buy in quantity. So fully a third of the stocks will do a full day's volume or better, and probably at 200 stocks will do 10 times volume or better, and even half the stocks in the Russell 2000 are going to see at least half a day's volume. So if you're an institution who wants to buy or sell, you know, a couple 100,000 shares, this is a great opportunity to do that because you can trade against the index order flow.
So it's not only the index funds themselves that are active come next Friday.
That's right. It's like a big party, and they're coming, and so is everybody else.
Okay, so I've seen some estimates that appear to be counterintuitive, where you have stocks that have risen appreciably year over year, yet we see expected sell imbalances for them, and by contrast, stocks that have gone down in value that have expected upticks in purchases. How does that work?
Yeah, 2 points to make on that. One is that I think there's a bit of a misconception that you're measuring yourself against last year. The last Russell rebalance, so you might say, okay, my market cap is up 10%, and the Russell overall and the Russell 2000 is up 18%, so I should, have a weighting that changes that way. What happens is your weighting changes every single day as your price moves in the index. So really what's happening on the rebalance date is you're accounting for new entrants and companies leaving the index. So for example, right now there's about 1,963 stocks in the Russell 2000. There's about 973 stocks in the Russell 1000. You don't quite ever get to that full number because of M&A, and even though they add companies due to IPOs quarterly, you don't have the full number. So when you're filling up that index, you're taking companies that had no weight, and now you're assigning them weight, and that means that other companies' weights will, generally speaking, go down just a little bit. So that's probably the main reason.
So it's not just about absolute market cap, it's about relative market cap.
Absolutely, yes. Okay,
so one thing we've read a lot about is companies doing share buybacks.
Yeah.
How does that filter in? Because a company can do a buyback that would reduce their float, but their market capitalization could still go higher. How does that factor in?
Yeah, so it's very important to note that to be included in the Russell, they measure you based on your market cap on their rank day, which this year was May 11th. But your weight in the index is largely determined by your publicly available float. So if you are buying back shares and you're reducing your outstanding and you're reducing your float, that can impact your weight in an index. And over time, indexers, as you're doing a buyback, would have less shares. Conversely, if you do an offering or if you're issuing stock throughout the course of a year, that would, all else equal, bring your weight in the index up as your shares in the index move higher.
Let's bring in the Nasdaq closing cross. How does that come into play here?
Yeah, that's a very important element for the Russell rebalance. But most days, every day in every stock, there's the ability to have a Nasdaq closing cross. The whole point is to organize the closing activity. Half the volume in any given day is either at the open or at the close. And with the growth of passive, it's very important, ever more so, to have an organized closing process. So particularly on a rebalance day, where in the Russell closing cross we'll probably do 1 billion shares in 1 second. What we're really trying to do is match up buyers and sellers at the end of the day. So if there is an imbalance, for example, if there's 1 million shares to buy in a stock and only 800,000 shares for sale, that 200,000 share imbalance can get offset by, for example, an institutional seller. And we match up that buyer and seller, and that's what keeps the prices from being as volatile as they could be.
So we've talked a lot about market capitalization, but there are other families or other indices within the Russell family. How are those come into play, and what organizes them?
Yeah, so Russell's mainly known for the Russell 3000, which comprises the Russell 2000 and the Russell 1000, but they also have a Russell mid-cap index, for example, that doesn't get a lot of attention. They also have some sector variations, and companies will be in one or more of these in addition to being in the Russell 1 or Russell 2. And finally, they have some style indices like the Russell Growth and the Russell Value. So the Russell will do an analysis to look at either price to book or expected sales growth and assign weight to a company, either primarily all value, all growth, or in some cases a little bit of each, so that the ETFs will buy you based on your relative weight, whether it's a growth or value style.
Mike, thanks for a great discussion. We appreciate it.
Thanks. Great to be here.
To stay ahead of trends in passive equity ownership and to identify which indices are most important for your stock, please be sure to ask about Nasdaq's Passive IQ product as well as our surveillance services. And please join us for our next discussion on IR Insight Live for key topics in the capital markets. Thanks so very much for joining us.